Hi everyone, and welcome to the CashFlow Option Spreads video where I'm going to be focused on the $1 Million Twin Peaks pattern report and daily trade scans. Not just a Twin Peaks pattern or just the report, but the Twin Peaks trading strategy. The CashFlow $1 Million Twin Peaks pattern is one of the most effective, efficient option patterns for geometrically growing your account. You can see here from this trade right here, this is a trade that closed out today, the day of the video, where I made $510 on this trade, and it took 2 days. So the day of this video, if you're watching this, is 5/29, and this took 2 days to make $500 on this particular pattern as one example. And the pattern is based on a very specific relationship between the short strikes and expirations and the long strikes and expirations that form the Twin Peaks pattern, which is why you see here the two profit peaks in this projection graph that occur at certain points based on where the market ends up trading on expiration. But perhaps one of the biggest perks of this pattern is that there's often no risk on a significant move higher or a significant move lower. And if there is risk, it is usually very small. And I discussed this extensively in the report as well as the video where I explain all of the report details. But this creates some of the highest probability option spread opportunities you will ever see in trading. In fact, this pattern and this strategy requires very little capital. The risks are very low. The probabilities are very high. It is super simple to execute. There is no mid-trade adjustments like you have in so many option spread strategies ever. There are dozens of opportunities every week. It is a perfect strategy for scaling or compounding. And this can potentially create a 5-figure monthly income for you once you start. So there are a tremendous number of benefits with this approach, with this strategy, with this particular option spread pattern. Is unique in so many ways. But there's also, with this pattern and report and strategy, daily trade scans that we are going to give you. In other words, we're going to show you the opportunities that exist for that day, and there are multiple opportunities. So I do have a video where I show you how to go through these opportunities and pick the ones that you may want to take advantage of. But to have the daily trade scans right in front of you cuts out so much time. So we're pointing you to the trades that are available, and that's going to just make it super simple for you to be able to take advantage of this approach. So you have the daily trade scans. Here's what you get. You get the daily trade scans. You get a whopping 178-page report. Now, if that seems a little intimidating, a little daunting, don't worry. It's graphic heavy. I have a lot of illustrations in there, so it's not 178 pages of reading. It's a little bit of reading, 25 pages of reading, and then there's some graphics and whatnot, even within that 25 pages. And then a lot of it is simply showing you how it works through various trade scenarios. So a lot of graphics. If you like pictures, a lot of pictures. But then there's nearly a 2-hour video going over the report. So you will have the ability to reference it and read it, and you'll have the ability to go through the video as I explain various pieces to the report as well. Then at the end of the report, there's actually an exact compounding plan or scaling plan for creating a 5-figure monthly income with this approach. And that's the way you're going to do it. You're going to do it through scaling. You're not going to want to come in here and trade a large trade size at the beginning, because there are a few things that you need to learn about this. There are potential mistakes that you can make, and you need to have some success under your belt before you go larger trade size. And this gives you the plan for doing that. So you can come in here, low trade size, low risk, stress-free, implement it get some success under your belt, and then compound it. And that's when things start to get pretty exciting with the potential of this approach. So I already showed you a trade that I exited today. Here's a trade that I took right after I exited. It's the same exact trade. And I took it right after I exited the one this morning. And here you can see at the time of the video, 31 minutes after I entered the trade, it's already up $144 in just 31 minutes. So the first trade that I just showed you took a couple of days. And this trade is already up $144 in 31 minutes. I talk about exit. So we have 140. Do we take it? And the answer is no. As a general rule, the answer is no. But I go through all of that in the report and the videos. And over the next 3 days, part of the reason why the answer is no on taking this is because the maximum profit potential is somewhere around $6,000 with this particular trade that I've taken. So I'm just at the very beginning of the profit levels, and quite frankly, it would not surprise me to see these profits go away and then come back and go away. So kind of going back and forth a little bit before it starts to hit, but you never know when the opportunity will be done. In other words, I could wait on this one. And possibly might even be able to get a better price than what I got it for. But this price is a good price, so I went ahead and got in, and within 31 minutes, already had a $144 gain with the potential of as much as $6,000. And how does that work? Well, if the market moves down significantly, I'm only going to make a small gain. So if you go back to this graphic, if the market moves down significantly, so in this example and in this graphic, this is where the market is. And so if the market moves down, I'm going to make a little bit, but I'm not going to make very much, right? There's no risk down here. So I'm guaranteed to make a little bit of money. And that's kind of how that is with that particular scenario. So if the market moves down significantly, I make a small gain. If the market stays the same, I should make possibly as much as $1,500. Now, I'm guaranteed to make money if the market stays the same. Guaranteed to make money if the market stays the same. The amount is going to vary, and it's probably going to be somewhere in the $1,500-ish dollars, something close to that. Maybe $1,250, maybe $1,600, maybe $1,700. If the market moves up a little bit, it'll be a little bit more. If the market moves down a little bit, it'll be a little bit less. And that's kind of how it works, right? So $1,500 if the market stays the same. Guaranteed to make money if the market stays the same. Obviously, I'm just not quite sure how much that's going to be. I have a solid estimate, which I'm going to show you here in a second. But nevertheless, if the market moves up around 8 to 10 points, so it doesn't have to move up very much, 8 to 10 basis points. It can do that in a day. But if it moves up 8 to 10 basis points by expiration, it will then move into what I call my major profit zone. And it is within that profit zone that the potential is about $6,000 of a net gain, of a net profit. And if it moves up further than that, then this just starts to decrease. But if it moves up further than that, there's no risk, right? So you get into my profit zone, and this is the projection, and then you get past the profit zone, and there's still no risk. And you're like, that's crazy. It is crazy, but there is a gotcha, and I'll get to that here in a second. All right, so here is what's called a matrix, an option spread matrix. Now, this is available to you for free. You can create these matrices for free, and the report shows you how. Nevertheless, what this is showing, this is today's expiration. This column right here is today's expiration, and these are spreads at different strikes. These are all the same exact Twin Peaks spreads at different strikes. These represent spreads that are in the money. These represent spreads that are out of the money. And this one is the one that I took this morning. and already was making $144 within 31 minutes. I got in at a credit of 10. All right, that's my fill price. Now notice, as the market moves up, right, what is there? The credit becomes a debit, right, immediately. That's not very big because this is a time-based approach. And so as you go across in time, so here is today's expiration, here is tomorrow's. This is in SPX, by the way. So there are daily expirations. Same thing within SPY. There are daily expirations. Same thing with the Qs, daily expiration. So you can apply this to basically any stock index market that has daily expirations. And so this is the spread that expires today. This is the spread that expires tomorrow. This is the one that expires in 2 days, 3 days, and then this one is 4 days. So technically 4 days, but really it's closer to like 3 1/4 or 3 1/2, 3 1/2 days, right? But as time goes on, right, so we get closer to expiration. So here's day of, and you notice how big is this particular spread that I'm in at this particular set of strikes. This credit here is projected to turn into a debit of 765. And as you can see, I'm in, you can't see, I'm in a 2-lot on this particular trade. All right, so I'm in a 2-lot, which means that I have 2 of these from a 10-cent credit, and if they go to a 765 debit a piece, that's a $1,500 gain between the 2 of them. So $775 gain a piece. That's $1,550 of profit. That's why I said if the market stays the same and only time passes, you're looking at about a $1,500 gain. If the market moves up immediately, you're still going to want to hang on to the trade because as time passes, notice here, this is closer to being at the money. This is 130, here's 335, 350, 1095, and then 2580. And then you come up a couple of more points and you get up to about 30, $29 to $30. So if I go from a 10-cent credit all the way and the market moves up and time passes, and that's what this represents, market moves up and time passes, that spread is projected to be worth somewhere, and these are actual prices, by the way. So this is not a projection. I'm projecting that this one is going to be similar to this one if the market moves up. Now, there are other things that affect it, so it's not going to be exact, but if you get up to, let's say, $30 a piece, then that's $6,000. In fact, that's over $6,000. And that's where I get my maximum profit projection. And this actually, as the day wears on, is actually getting a little bit bigger. So this is actually, in these 2 numbers are actually around 32 a piece right now as we speak. So again, a $6,000 potential gain. That's how I come up with that. I'm looking at actual prices of actual spreads of the same spread, only different strikes relative to where the expiration is. And I make that comparison. These, by the way, the matrices are gold. You won't find them anywhere else. Again, I give them to you for free. You have access to it. You'll find out how to do that on once you get the report on how to access and create these matrices for free. And you're going to see these in the report all over the place. They are absolute gold for giving you a good idea of the value of the trade. Now, nevertheless, the trade that I showed you that I exited today is based on the market moving down slightly after 2 days. So this was only a 1-lot, this particular trade. It was only a 1-lot, $510 in 2 days, and the market moves slightly down. Okay, so if you look at this, if the market moves slightly down, right, look at that, $447. So I pulled out 510, so it was very close based on the one that actually expired today, and I got out early. Nevertheless, that kind of shows you exactly how this works depending on how you set the trade up. And this is about as close to stress-free trading as you will ever experience. You put the trade on, you wait for the price, the right price. When the right price comes, you take the trade, and you can do that by just setting an order. You don't have to watch the market. You can just say, okay, if and when this spread gets to a 10-cent credit, I've got my order in. And I just let it sit there. And either it gets filled or it doesn't. And so if it gets filled, great. If not, fine. There are other opportunities that I can get involved with. So this is about as close to stress-free trading as you will ever experience. Now, having said that, there is a risk warning. These trades sometimes look invincible. They sometimes look like there's absolutely no way that there's any risk on this trade, and that's not true. There actually is risk on some of these trades in certain circumstances and based on certain time periods. And so I don't want you to come in here and think that you can just put on any Twin Peaks trade opportunity and expect it to work out. Don't just skim over the stuff. I've been doing this for a long time. I've been trading options since 1987. I know how they work. In fact, this report, just from this one report, you're probably going to learn more about how index option spreads work from this one report than you will have learned in all of the material you've ever gone through in the history of your trading. Maybe not for some of you, but for some of you, that absolutely will be the case. I mean, your eyes are going to be opened to how these work and why the opportunities exist and why they don't. You're also going to understand where the hidden risks are. And you're going to understand how to avoid them or minimize them. So this is not just a trade. The Twin Peaks pattern is not just a trade that you put on anytime, anywhere, anyhow, no matter what the conditions are. There are certain conditions that you want to put them in on, and there are certain conditions that you're going to want to avoid. And all of that's covered. It's very simple to understand and execute. So this is not just a pattern. It is also a strategy that you are going to be learning. So for example, with regard to the risks and some of the issues, some of the hidden risks, if you will, when stocks are down, index option volatility increases. Period. End of story. That's how it works. When stocks move down, the more they move down, the higher the volatility goes, okay, relative to where the market was. And that situation actually creates different opportunities in the Twin Peaks strategy. And in fact, if you want some absolutely unbelievable, crazy good, crazy risk-reward metric trades, wait till the market begins a significant correction. You're going to see some of the most insane opportunities present themselves. But having said that, as the market's moving higher, right, as the market's moving higher, volatility in index options decreases. And what that does is that creates risks in certain opportunities that where the risk did not exist when the market was down. And so you have, with the same exact trade, in one certain type of market condition, you have significant profit potential. And then in another type of market condition, when the market is up and volatility is low, if you put on that same exact trade, there's actually risk involved that did not exist the first time you put it on. And what I do in these videos and in the report is I focus on these risks and how to minimize them or avoid them altogether. And so this is a complete strategy. It's not just, hey, here's a trade, good luck with it. I'm going to show you how to execute. I'm going to show you everything about it. And you're going to understand it, and you're going to be able to implement it, and it's going to give you a very high probability of long-term success. So with regard to how to minimize the risks, I'm not talking about market timing. When I say I'm going to show you when and how to enter, I'm going to show you when and how to exit, I'm going to show you which Twin Peaks opportunities to take, because there are some that are better than others in certain market conditions. Again, there are dozens of these opportunities every week, so you're not going to take dozens of trades. right? You're going to pick 2 or 3, and you're going to take them. And I'm going to show you how to narrow down to the highest probability trades and how to find the best Twin Peaks opportunities. And when I say when and how to enter and when and how to exit, I'm not talking about difficult concepts to understand. I'm not talking about market timing concepts. I'm not talking about being able to read a technical indicator and determine whether the market itself is going to go higher or lower. I don't care whether the market goes higher or lower. Absolutely do not care. So these instructions are super simple. They're not like these convoluted strategies out there where you have to have 15 different oscillators line up and then the moon be in the right position. It's you've probably seen those where it's just mass confusion. That's not this. A couple of basic, simple concepts, principles that you need to apply, given within the instructions, and if you follow those, you're going to put yourself in a really high probability to success. So when to enter and exit is not based on the timing of the market, but rather a simply timing on the entry relative to when it expires. Right? That's what I mean by when to enter and when to exit. I do not mean based on market movement or trying to predict market movement or anything even remotely close to that. So the question is it better to place a trade that expires 2 weeks out or only 1 week out, or maybe only a few days out? And the answer to that question is going to be contained in almost every opportunity, right? So you're going to follow the concept, you're going to follow the principles, and you're going to be able to answer that question. It's quite frankly, it's logic. And all of this is explained in the videos and the report. So if you have 15 minutes a couple of times each week, that's all it takes. You have the ability to efficiently and effectively grow your account geometrically with the CashFlow Twin Peaks pattern strategy. It's as simple as that. And if you will get on board today, you will get a tremendous discount on this package. Again, here's what you get. You get the daily trade scans that comes with a video. You get a whopping 178-page report that comes with a video. That video is nearly 2 hours long, going over the report and discussing all of these things that I've been talking about in this video, only revealing the exact details. And then you get an exact compounding or scaling plan for creating a 5-figure monthly income. You get this at a huge discount right now. It's a great starter package for you to get involved with the cash flow option spreads opportunities. So I'd strongly encourage you to click on the button and reserve your spot now.